Okay, good morning, everybody. And this is Gary Follett on December 12th, 2025. I'd like to get this video out when the day goes on so you have it for the weekend. I think something is very, very important to see. So we talk about markets that have undergone accumulation distribution. And we'd like to see our markets that have like buying tails or markets that have selling tails. So a buying tail would be something where market goes lower and then closes higher. Market closes and closes higher. And that is something that is very important because that's part of the accumulation act. Okay? So what it looks like here is the 50-minute E-mini S&P is that you have a definitive trading range, right? I go back here. Pardon me. So if I look at the action on the 50-minute chart, we like to take over maybe that last day or so, because it gives us that perspective of the market. Okay, so here we want to know what the background is in the market. Not always get trends, but background. So when we get a market that begins to move up or move down, we want to see the prevalence of what the market is trying to do. So let's just take this recent action. I know that the market in London, we look at that first, or Europe, that's the high of Europe, okay? About 69.11 area, okay? So we want to mark that area. That is where buying has to overcome selling. So 69.11 is buying overcoming selling, okay? Next, we have the reaction low in London. Well, that happens around here. This happens around the 68.89 area, an area that we're at right now, okay? So looking for this buying and telling our particular action. So until we get above this level, it's not drawn properly or well. Until we get above those levels, the market maintains the structure of its trading range. So just in case it gets winded, I expect this low to like spring here now. Okay, so its reactionary low right now is 68.99. Right, 60 is that right? 68. I'm sorry, 68.89. So I want to mark that because that's the high and the low of the trade range we're in. If you notice, when I'm talking about these little buying tails earlier, you got a little buying tail here, little buying tail here, okay, a little buying tail here, and it runs away from the action. Okay, it runs away from the action. So these little buying tails we talk about that are somewhat significant, okay, in market. A market's going under accumulation. Now, that accumulation of 15-minute charts may mean 10, 15 points. It may not mean, like this large move, okay? So don't look at that. It's like, oh my gosh, that thing is like under major accumulation. It may not be. It may be to a point to where this spacing here only gives you up to here. So if I'm buying these little buying tails on the close here, and the one that I would buy is the third retest here, was this one, would be the buy one, right? The opening was, I would try to get out here, okay? Now, it didn't get there, so your liquidation point on the 15-minute chart would be here because the market is not undergoing accumulation at that point. Absorption, rather. You would want the market to close mid-range, high mid-range. That's a low-end close. So you do not want to launch in a 15-minute chart. You have to run quickly. Okay, as far as that goes. Okay, you have to run quickly in a 15-minute. If this was an hourly chart, you hold on to the trade. But 15-minute charts, you can't allow yourself to be in a situation in which you get caught in a 15-point move that's going to take away your profits and take away. So we get this market here coming down. This is a little shorting of the downward thrust. So that's a little stopping action. SOT, you can see the range is getting smaller. We want to look for that. Okay, look for that. We get the SOT afterwards. Right, the little smaller range, right? It's a short and downward thrust. Wider bar, a little less. That's the SOT bar. It gives you that reaction, well, no cause. This doesn't give you enough reaction. This was the one to buy. I try to correlate that to maybe the market going over here. These little highs here, and it doesn't take you really much. The line that I want to draw is right here. This is the markup bar here. Okay, so that's a good reason to buy. Remember, large range bars get retested. So this is the one you would buy for a move up. Liquidation up here. The difference between these 2 points is about 20. It's about 11 points, about $550. Okay, so if this was absorption, these close would have been high end. The fact that, as I mentioned, with the low end close is not a good close. You got to get out and reevaluate the situation. Okay, so same thing to the downside currently. We'd look to buy. This is the opening range. Always get volume. We look to buy a spring of that level. This is we're looking for a spring of that level, which may happen by doing the broadcast. We want to buy a spring of level, looking for a retest back up to the highs again. So we're playing this trade ranges until we get that supply or really get that demand. This is not the supply volume that comes in, because this is the opening S&P. So you have to discard a lot of it discount-wise. So we have markets coming down, SOT, rallies, kind of labor rally, but that's before the opening. The background's positive, so we're going to be a buyer. Only I'd buy this on a spring. If we get lower, when it comes to volume, I would wait. So we spring, I would definitely look to be a buyer up the market here. You could say the selling was pretty pronounced here. This was before the opening, right? This has just happened, okay? But I would wait here because we're coming down fairly heavily, either for a short-end downward thrust or a spring to look to buy the market for retest back higher. So remember, opening range, the opening high and the low of London. We want to mark those. We did. We want to buy these little tails, a buying tail, give you a little spacing. This is the one that correlates to the buying back here. This was the one I would buy. It has a little cost base here up until here. My goal would have been to here. But because it's got this bar here, I have to get out immediately. Now we're trying to get a shorting of thrust currently in the market right now. You see the small range bar as support. That's what we want to see. Obviously, a mid-range high, mid-range close high, we buy the market to go back up to here. So that's how you read a 50-minute chart. Looking for ending action and trying to buy the SOT or a bag holding bar or a spring bar that would happen. Okay? Very, very important. Now, I want to take you over to another market that someone mentioned, the gold market. Because gold has been flying lately, and it's something to watch, quite the quality. In this case, we have this 60-minute gold chart. And this is what we call the vertical absorption. Okay? And vertical absorption is basically like kind of like climbing steps. Okay? It's going, instead of going horizontal sideways, it's going vertically up. This is what we call this vertical absorption. Then we get that markup. The first spring that we get right here is your edge, because the market goes out its highs. You know, gears overextended. It's a retest of a spring. It's a retest of the market of the buying bar position. It's also a spring of the last bar. This is the bar that you have to buy this bar. It's your buy edge. Okay, it's a gold. This is 60-minute gold. Okay, it's a buy edge. You say, well, here's no cause. It can go sideways and build cause, right? But you want to buy that bar because the structure of the bar goes up. Market tries to come down here. No supply, no selling. Market goes back higher. Remember, we want to buy bars that show us volume bars. Well, this bar here gives you that, doesn't it? This bar here gives you a high volume bar. Boom. Now, we wouldn't want to buy that spring here because it's too far away from the danger zone. Okay? So we're waiting now for the market to go there. Okay? So the thing is, you should be long from here, and all this should be adding to your structure. If we start to get 3 or 4 bars, that's a couple hours, that's close to the high, that'll be absorption. Since this is an hourly, it's a 50-minute chart. So since the 50-minute chart, so you'd want to buy a retest area here. I'm sorry. You want to buy the retested market here. So I made my mistake. Is a 15-minute chart. Okay, revert it back. Okay, so you want to buy this spring here. Boom. You wouldn't want to buy this here because it's too far away from the danger zone. So you'd be waiting for absorption here and a springboard. And we may get that today. Springboard will look like sideways action, a spring of our previous bar, and upward close. Okay, so they're looking for absorption here to the market. I now go to the hourly chart, which I meant to do before in gold. We see something very interesting. We see a great process in gold. We see the market going higher, and I'll take it back a little further for you, and we see some strength. This is also a sign of strength. It can happen anywhere on the right-hand side of the market. So this is what we consider a sign of strength of the market. Okay? High volume, large range. In this case, is ready for markup. Okay, we can't buy this. We have to buy the retest, right? If we miss it. Okay. We want to buy springs. Well, again, this is the market here. We have lows here. This becomes your spring of the market. These two bars are a spring buy. So after, this is very important, after a sign of strength or demand, you want to buy that spring because the trend is up to Wyckoff. If I mark this low and I mark this high, okay, that's the larger trade range, right? This spring occurs maybe about halfway in the range. Halfway, a little bit more than halfway in the range, okay? So I'm looking for ending action. This is nothing. We don't trade this. We trade the spring that goes on there. We trade the spring as far as that goes. Okay, so bottom line is that by the spring from strength of sign of strength, it's a perfectly right trade, and we're buying all here. The market then gives you this is upside probe here, an upthrust probe there, with no supply. This is an upthrust probe. And we're waiting for the market to absorb. This is the absorption process right here. So it's really schematically perfect. This is the look at the high end. High end close. This is vertical absorption on the right-hand side. Perfect Wyckoff. Vertical absorption on the right-hand side, and then markup. After markup, we form a trade range. Markup, trade range. The 6-minute chart, looking for a retest back down to here to be a buyer or structure-wise. But you see how perfectly, when you're right with trend, how this ends on the right-hand side with the sign of strength. Boom. Comes back maybe halfway back. That trigger is the spring and also the buying tail, right? Buying tail, a spring. Want to buy this. If you buy the spring properly and identify it, you'll get caught usually successfully in trend. Trend is up, spring is up. What's my expectation? Up. Side was actual no supply. What's the thing? Vertical absorption. Up. High volume here. Going back down. The buying is in control. The selling is lighter than the buying. Up. Very bullish chart on the hourly chart as well, too. Okay? Many times on a Friday, they will buy gold and they will buy crude oil. Why? To fight the quality, safety, in case something happens on the weekend. And that's what you see there. That's exactly what you see there. So, this chart and the 60-minute chart is a very clear chart in gold. And we want to be able to use that. So we want to sideways strength, spring, buy, markup, vertical absorption. It all has on this particular chart. All has a 60-minute chart. Okay. You could hold on to a 60-minute chart a little bit longer than you can a 15-minute chart. Because a 60-minute chart really takes a couple hours to turn structure many times. In a 15-minute chart, they can turn structure very quickly. So the longer the time frame, the more assured you are of the trend and of the background. This is just a beautiful chart of the market going down here. If you go back down to here on the low, just a little reference-wise, you got a reactionary low. It ends with a perfect spring. Boom. Comes through some vertical absorption, retest, upside probe, trade range. trading range. Side of straight spring or trading range. Boom. It's an awesome chart to be involved in. Awesome chart to be traded. Look how nicely that comes in. It could correct, but the spring on the right-hand side, at least the buying, tells you the market's still bullish. And then the market is just side of strength and markup. I hope you enjoyed that little action-wise. Very, very important. Very, 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 very important. And if any questions, feel free to contact me. But this is a great chart on both of those charts. And I'll be in the room today. Any questions, please let me know.